Good evening, traders and investors. Markets ended up closing stronger again today. Now, mostly the day unfolded pretty much as expected. I was talking about how we are going to have a gap lower today. If we take a look at the markets from yesterday's close, it was set to gap lower. And usually gaps get bought up, and we saw this gap and go more or less this morning. Equities continuing to push higher. We saw the NASDAQ hit all-time highs. We saw the S&P 500 hit all-time highs. And that is kind of what we've been expecting. When we look at the SPY chart and we zoom out a little bit, we've got our bull flag pattern here that has been forming over the past few sessions. We've got overbought down to oversold. We got the rally. We got the bull flag. We've hit the 618, which if we hit the 618 and have a pause or hiccup, which is traded sideways a few bars, we should see this continue to push up towards this 100% measured move, hopefully tomorrow. And then from there, the markets could take a bit of a breather. Now, if we kind of step back and just look at the markets kind of on the daily chart, I'll just zoom out a little bit. The market still could be a little bit choppy and sideways going forward. And we just need to be prepared for that. More or less, after we have a move up in the market, we can see the market kind of chop around, and it can even linger for a while before it expands. When it does expand and moves higher, eventually you kind of get into some chop. Or, this market condition where it struggles for quite a while before it runs up again. And so the question is this a continued pause? Are we going to chop around here for a bit? Or are we going to just keep muscling higher? Overall, the markets are still pointing to higher pricing. The trend is up. The 30-minute chart is saying we're going to go higher tomorrow or this week based on that chart pattern. And really, we got to be focusing on the long side of things. Stocks were moving up today, but we did see utility stocks move up even more. They continue to outperform the stock market, which is a little bit of a warning sign. We just need to be aware this is typically when we see the utilities outperform the S&P 500 in a dramatic way, which we're getting there slowly. Usually we're going to see a bigger pullback in the markets, and it feels like the market is ready for a pullback, but we do not want to bet against this trend. Let's just let it keep melting up and moving higher. We saw healthcare up 3% again today. This is 2 back-to-back days. Now, I don't follow healthcare. I don't follow too much around the news and political stuff. But I would say based on this move, something has hit that has created that. And typically when you get these kind of moves, they're generally news driven and you never know when they're going to hit. And of course, you just don't know if they're going to be given back. If that price will just get whipsawed right back out of it a few days later once this excitement moves. So I know somebody wanted me to cover healthcare the other day. They wanted to know what their thoughts are. And that was, I think, 2 sessions ago, just before I think it even had this big pop. And so I can probably imagine what's going through your mind as you were thinking, you're interested in this space and then boom, it takes off without you. But keep in mind, this looks like a news-driven move. This is not normal price action. So that is just a total fluke that we brought it up as an interest sake and then it popped and took off. And if you have FOMO, just realize you shouldn't have FOMO because this is just a random move. It just happens to just luck out that you were interested in it and then it popped. I don't think there was a whole lot of, it could have, if it was news driven and you were expecting this news to come out, remember if the news was the other way, it could have dropped for 2 days back to back, similar to what happened over here, just a huge drop. So don't get caught up with fast moving things. Another one somebody wanted me to look at real quick here was Hood, which is the Robinhood ETF. They talked about how it was rocketing higher and they wanted some intake on it or some analysis on it. More or less when you have a big percentage move, I don't know what this is. Let's just eyeballing it. It's probably similar to this one here. You get a big percentage move in a few days. This was a 25% move in a couple trading sessions away from the 20-day moving average. It was, if I can get this out of here, from the 20-day moving average is about a 30% move. Let's just see where we are right now with this price action. Typically these blow-off moves, when people ask me, they want to know about something that's moving fast, it's usually hitting that FOMO phase. So in the last few sessions, this has moved 15%. And overall, if we were to just look at it, if I can get rid of these tools here, it's moved about 21%. So again, I don't know what's going on with this. It could be just a crowded play. Again, I don't follow this individual stock, so I don't know a whole lot about it. But usually when you get these big, strong moves and people start asking about it, it's usually kind of like a lure. I call it, it's almost like a fishing lure. Some people are getting lured in from the shiny or the fast, these shiny green bars, these big green bars. So just be aware of that. So on that note, if you haven't been to our blog on our public website here, there's a bunch of really great kind of evergreen articles that teach lessons and show some really interesting angles of the markets and things you should pay attention to. One of the members here was asking about valuable lesson, knowing your personality type. And this is using the Myers-Briggs. There's 16 personality types. And more or less, I explain the ones you need to somewhat be aware of. If you have an S for sensing or an N for intuition, it means you're sensing, you're feeling things, and it can make it very difficult for you to trade. But this member wrote in and they said they just did the test. They are an INTJ, which is what I am as well. And they want to know, what does it mean for them? They asked, does it make us better at investing than other people or something like that? So from a high level, I would say yes, simply because it means we are introverted, intuitive thinking and judging. We're kind of called like the architects or the scientists, depending on where you pull that up. And so it just means we run on logic. We run on systems, strategies. Things need to make sense. We don't go chasing things because everybody's running in one direction. We look around and be like, why are they running? It's totally different. We don't follow the herd. We go our opposite direction. So this is a really good article. I would say, yes, it can help you as a trader, because it means you want to follow rules. You don't want to just wing it. And before you do something, you want to know why you're doing it and all of that. So this is a good article to read through, learn about your personality type. INTJs, I think have an upper edge simply because we're very logic and we're not driven so much by sensing and feeling and always have that, I feel like the markets are going to roll over, or I feel like it's going to take off without me. That stuff is what sparks your emotions, right? Those are feelings, and that's what can get you into trouble. So let's take a look over at gold real quick. A bunch of you have sent me, because I recently talked about how I might be getting out of my physical precious metals that I've held since 2019. If I was to go back to the monthly chart, I'll just go back here. So more or less, there's been a series of super cycles in gold. I remember being involved in the one in the early 20s. I remember catching this spike over here. I remember playing this spike over here and totally giving up on the whole gold space when it broke down right over here. And then I got back in 2019, and it's of course had a very massive run to the upside. I believe we will eventually get some sharp pullback percentage-wise. And I'm waiting for it to get up to my 4,100 target. And depending on how it gets there, let me clear this chart. Depending on how it gets there, I'm gonna go. A lot of it is gonna go by feeling. I mean, I say feelings, but I have a bunch of rules in place and things that I follow to know what the general market and the psychology of investors moving into the space are doing. So when I see red flags everywhere that gold is capitulating and potentially getting tired, then I'll probably be closing out most of my physical, or pretty much all of my physical metals, because I believe I can buy them at a later price, at a lower price, and it'll relaunch, and that money I can put somewhere else when the rest of the markets and everything else potentially is falling together. As you guys know, I do have a bearish outlook. Doesn't mean we're short. In fact, we're long the markets and we're long gold, but it just means when things do turn, I don't want to be holding stuff, and I don't want gold to be dormant. I want to put that money to work elsewhere and also move that capital around within my different businesses and trusts that I have. So I do need to liquidate it as well to do some fandangling, and I'm just going to time it with the market. Once I see it start to fizzle out, that I can adjust that. So I'll keep you guys posted. When I'm getting out of my physical gold, I will let you guys know. I pretty much let you know all the trades I do when it comes to ETFs and gold and all of that stuff. So don't worry about that. And one of the questions was, if gold shoots up very quickly, like in the next few days, and spikes up to that level, would we change our targets on our bonus discretionary trade? Because we are long a gold ETF to try and make some extra money from this big breakout in this run, which the weekly chart shows it nicely as well. We can zoom in on the weekly chart, but we had this big run up, this big bull, or this big pennant formation, and then of course it's broken out and we're letting it run higher. I'm probably not going to change the way I trade that position. I usually don't. You can do. If you want to put a trailing stop and let it run higher, you can totally do that. When I trade a discretionary trade and I have my preset rules, I use Fibonacci targets. I usually just follow them. And I don't really care if I miss out on upside moves. Over time, these Fibonacci levels are very, very powerful. And if you usually don't take profits at them, eventually one of them will roll over and you give back a bunch of gains. Now, gold's in a big super cycle. Yes, everybody's really bullish. It could continue to go higher. And typically after a 100% measured move, gold will go higher potentially for a week or two or a month, who knows? But it's usually not sustainable. We usually see a bigger correction and pullback. So again, you guys can do what you want. I share what I'm doing. I'm about managing risk, locking in gains. I'm good with my expectations of, I was expecting gold to make this 15 to 20% move with our targets. And I hit that trade, I lock it, I close it out. I still hold physical, obviously, a lot of it versus the ETF trade here just to squeeze a bit out. So even when I sell the discretionary trade, I really don't care too much because I have a hell of a lot more physical gold to still play it if it continues to move up to some higher blow off top levels. Let's take a look at silver. Silver is getting up to all-time high territories. You can see we're tagging up around 48 here. If we zoom way back on the charts, you can see we are getting up to all-time highs. I talked about this about a month or so ago, saying silver has the potential to go parabolic and really shoot up and hit the 50 and break the all-time highs, and we need to be aware of that. Just keep in mind, whenever you go back in time, let's just scroll back, whenever you see these big, let me get rid of some of those. Well, there's even bigger ones back here. But you'll see whenever we go straight up like these, pretty much all of these, the market comes down very, very quickly, right? Get another huge spike. Everybody thinks it's to the moon, and then it pulls back a lot. Percentage-wise, a lot of these are very big pullbacks, right? Like we're looking at 34%, we're looking at 37%. Again, so it makes a series of these spikes and then quickly gives it all back, and then a hell of a lot more in some cases going forward. So fast forwarding to where we are today. If we look at it, you can see we're starting to go parabolic. I believe we're going to pierce and hit all-time highs. The market is always trying to hit all-time highs or new lows. That's how the market works. It's always searching for untouched territory because it creates a lot of emotions, either extreme fear to the downside or extreme FOMO, which is another type of fear. It's just fear of missing out to the upside. So I do expect this to go parabolic, and you never know how much it's going to correct after something like this. And again, I think we're coming close to a 2008 type of scenario, which if you go back to silver in 2008, if we go back to 2008, you can see it had this parabolic move, and it did sell off, 65% roughly on that move, or 60%, sorry. Again, if we go way back in time and you look at it, it went parabolic just like what it's doing right now. And of course, it was a very similar scenario. I keep bringing us back to the comparison of 2007, how silver shoots up, miners come active, they become the crowded play, and everybody thinks they're going to the moon, and everybody's feeling good, and then suddenly the music comes to an end and the market crashes and corrects, right? So that's not what people want to hear in this space, but that is the reality of what price is starting to tell us in sentiment as well. So just going back to the articles real quick, I wrote an article not too long ago talking about the lessons from Cathie Wood, Tom Lee, and more or less, if you go back in time, like Tom Lee he's the new Cathie Wood. Cathie Wood was amazing going into COVID, and you buy everything, ARK Investments, follow Cathie Wood, you made a fortune temporarily, and then you're down 60, 70, 80%, and you're nowhere near those highs where you are now. So they go from hero status to not heroes. Tom Lee is the new fresh blood. He's given upside bullish targets and everything, and the markets keep going up and hitting those. And so he has got that hero status, and people are following him. The thing is, these guys are money managers and women, and they have the bullish bias. That's what they do. That's part of being on some of those big stations like CNBC and stuff. You've got to have that buy and accumulate and point to higher pricing, and things are going to be good. But when the music does stop, it can hurt. This is a good article to read. And it also it touches in actually into this perma-bear. A perma-bear walks into a bull market, and I'm guilty. As you all know, or many of you call me a perma-bear. And if I was a perma-bear, I wouldn't be betting on betting on higher pricing. But having this perma-bear outlook, like me telling you that gold, silver, and miners are in the last few weeks potentially of a blow off top here. The stock market could top at any day. Is pretty darn bearish, but there is strength in being a perma-bear with a bias, because it means we're checking like driving school, right? We're checking our mirrors. We know anything bad could happen at any point. And so by just knowing where we are in these cycles, we always have our finger on the pulse, ready to protect our capital at any point. And of course, no matter how bearish I am, when the market's going up, we are still long. That's why our accounts keep hitting new all-time highs. We're hitting new all-time highs with our accounts again today. Everything is just moving in our favor. Even though I'm bearish and the sky, I say, is falling, we're making money. And that's the difference. People need to segregate what I say and think versus what we're actually doing. What I say and think is preparing you for the music to come to an end, so it's not a shocker. But we still ride that trend up until it proves that the top is in. Also, we haven't touched on XLC in a little while. This is a position we are still long. We've hit one of our targets on here. It is pulling back a little bit today, which is interesting. Overall, it has had a pretty nice run to the upside, given, it's a pretty slow moving ETF, but it's had a nice run up. And right now it is kind of consolidating, trying to figure out what it's going to do. So overall, one of the members was asking, does it still have the upside targets reachable from where it is? And I think it still has that potential. 15% is our next upside target, and it has rallied more or less to the peak here was about 10%. And again, if a bull flag like what we see here is the halfway point, then the second half of this 8 to 10% rally is 15 to 20%. We have a 15 and a 20% target set on XLC. So we'll see if this ends up getting some traction and go from there. Last but not least, I want to just look at URA. URA, we've got a member, he's shared a ton of information with us on this. Now, long story short, it sounds like this subscriber is extremely bullish on uranium. So everybody who's in the space obviously is, because it's on fire, just like precious metals. But more or less, this person is saying that they think that because the unique situation that uranium is in and how it moves and how it's owned itself, it's not like precious metals, and it might be immune to a stage 4 decline. So again, nothing is really, I don't think a whole lot is immune to it. Just because it's unique and different doesn't mean when selling hits and pressure hits the stock market and investors, typically everything kind of sells off. If we go back, this obviously doesn't go back to 2008, but we can even take a look here at 2020 during COVID. I mean, uranium's had the same bullish story for a long time. It's just because it's moving up now, it feels more legit. But I mean, it will sell off with the market. When there is pure panic in the stock market, this is the weekly chart, it will sell off in a pretty big way. So in the grand scheme of things, I don't think uranium is immune to anything. Typically, when you start to think something is immune, you all know what I'm probably going to say, it usually means we're getting close to a top, right? That's the same with precious metals. That's not, that's just it's the opposite. Contrarian indicator, right? When everybody thinks something is immune and this time is different, is usually when people usually learn a pretty sharp lesson who don't lock in profits and don't manage risk. So I know there's a bunch of different ETFs on the Canadian exchange this person wanted to look at. I don't know a whole lot about it, so I can't really give you a whole lot of insight. It looks like one of the other members answered your questions here to some regard about how uranium moves and stuff like that. But again, these are, to me, uranium and individuals, smaller sectors and stocks, they are trades. I don't fall in love with them. You get in, make your money, get out, wait for a reset. You can play multiple times as it works its way up going forward. But in a nutshell, today we saw money flowing into stocks. We saw bonds ended up closing positive. We saw the dollar was flat. The dollar recovered. The dollar was down sharply this morning and ended up closing fairly strong on the day. That bar, it's a weekly, that's why. Let me go back to the daily chart here. So if we look at the dollar, it sold off pretty good and ended up rallying back. And the UUP ETF, I think, shows better how it opened sharply lower this morning and rallied its way back. When we look at the dollar, it does have one of these bullish chart patterns here where it's had a strong pop, a tight little bull flag, a strong pop, a tight bull flag. It is pointing to potentially another push higher where it's going to come up into this high. It's going to come up into this high. This could be it could be a big bottoming formation starting in the dollar. And when we look at the U.S. and Canadian dollar, it has already done that. So we're well, it's already much higher, right? The U.S. dollar is like equivalent to trading like down here. It's kind of like been floundering, and it's testing down near kind of recent lows. But you can see the Canadian dollar is falling, the U.S. dollar is holding up better, and we could start to see a very strong move come out of this for the U.S. dollar to strengthen against the Canadian dollar. So this kind of, to me, is a bit of an early warning sign that the dollar is about to strengthen going forward. Anyways, that's it for now. We'll talk to you soon. Bye-bye.